Hello traders and Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. Well, we're going to be looking at something a little bit different today, and that's Pfizer, the maker of the famous blue pill for erectile dysfunction. But British researchers have found out it's actually an amazing pill to help prevent heart attacks. And I thought today we'd look at Pfizer and see if it is worth buying. A couple of things you want to look at with Pfizer. Let's start with, this is the year-to-date action in Pfizer. As you can see, it started out the year not on a very good note, actually on the on the defensive. It sort of came down like this, and then sort of went into this sort of lullaby here, and then finally we had a monthly trade triangle. It came at 32.24 right here, and you can see since that time the market steadily moved higher. So I think the key thing here is, where would you buy it? Well, we've seen a pullback from the highs, which is a good thing. We're getting very, very, very close to the 50 support line. We've talked about this many, many times where it should be support. So I think it's probably a good buy right around these levels. And the risk would be, we're currently trading at 34.47. The risk would be, if we're wrong, 33.67. So if it were to move under that level, which is like 80 cents lower, we would just exit the position and just call it a day and stand on the sidelines. So that's the opportunity. Obviously, with the research being done in Manchester, England, about the benefits of using Viagra for heart patients, it could be a much, much bigger market for Pfizer for this blue pill. But we'll see what happens. But generally speaking, the technical is all good. We have a weekly and a monthly positive. And the daily is not positive. That's actually turned red. And it's a 55. It's a trading range. So we're at the bottom of the trading range, in my opinion, with getting back to 50. And I think we'll see this market pick up. It's not going to be sexy like some of the other markets we talk about, but I think it's a solid, potentially a solid performer for us. So let's see how that plays out. Now you can see quite clearly what's happening to the S&P 500. In just a short period of time, we warned about the resistance levels above this market. That was a great, great concern to us. And of course, we've had in the last 6-7 days, we had a big drop from the highs. And a lot of confidence has gone out of the market. Plus, we've gone below the 50 line here, which is not a good sign. We're just waiting for some of our other indicators like the weekly to turn down. The daily you can clearly see is down, but the weekly is still green. We've given you the levels in the copy where it should turn, if it does turn, but that's the levels we're looking at. But again, this area right here should provide some support for this market, in our opinion. So just around these levels, we should find support. So let's see how that plays out in this particular index. A little bit of a different story in the Dow. You can see if we put a weekly there, it's a weekly exit. So you've got a conflict between the monthly right here and the weekly, indicating a sideline position. You should not be in this market at the moment. And currently it would look as though we have a rather broad trading range just based on what we're seeing here. So I think, generally speaking, it is a trading range. I would be out of it, and there's no advantage of being in this market right now. Sidelines. Here's the NASDAQ, same as the S&P 500, really hasn't given the signal yet. You can see we've got a mixed picture on the daily, but not such an important one. But the one to look at is the weekly, and if that gives a signal, then I'd move to the sidelines for sure. But right now it's a trading range of plus 55. You can see the concerns we have. We talked about this all last week, and that's this area here. It's a broad trading range. We're at the top of the range. Resistance, not a lot of power to push it through. It reversed, and of course sentiment is everything in the market. How perception is seen right now is negative for stocks. People want to get out of them. So if that's the right thing to do, I don't know at this point in time, but generally speaking, we're waiting for our trade triangles to kick in. The other big news today, of course, is gold, which is powering on the upside. We've had really a $100 move from the lows here to the highs in a very short period of time, and I think that shows you just how much pent-up demand is in the market for gold, plus the perception has really changed. And I think if we were to take this out and look like maximum. In fact, let's take a look at the spot gold because that's the one we look at. This is a July contract, and you can see we're long from 12.79. That's the last time we were in this market, 12.79, and that's right here. That's where we've got long. We covered our position, our short position, from this level here, 12.61 at 12.17. So that was a fantastic trade of almost $4,000 a contract. And of course, we missed this move here. That's okay. We're in it now, and we'll stay in it until we trade triangles turn. So let's go and take a look at the spot gold. This is the key level we're looking at, the 1300 level, and it's right here. You can see this was resistance right here, 1300. We've just moved over that level, and then what that does, it actually provides us with a large base that the market's come out of. So we've come out of this base right here. You can see right here, and that's capable of carrying this market up quite a bit higher, certainly to the 15 and even the $1,600 level right here. So this is the target zone between $1,500 and $1,600. I think if we were to take our Fibonacci tool, let's take that off, put our Fibonacci tool on from this level to the lows, we're looking at somewhere around the 15-18 level on a 61.8% Fibonacci retracement. So it's definitely in the cards if we move this up further to the very, very high. You can see we're around 1580. So between 1500 and 1600, that's the ultimate target zone. But generally speaking, this market is going to go higher. The question is, should you buy today? And with that, let's take a closer look at the market. Well, there's no doubt about it. We've had a very strong market on the upside. I would say probably we've had 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row. That's usually too long for most markets. Most markets cannot sustain that kind of move without some sort of counter move. I would say if you're not a Market Club member, you may have missed the move, but we are long from 12.77 basis the spot gold. I would wait for some sort of pullback. That could happen pretty quickly, but I would think somewhere in the 12.90 level would be a very, very good support area, or even the 12.95. So let's see how that plays out. Generally speaking, though, we are bullish on gold longer term. This is crude oil. Big news in crude oil today. We actually had a signal to sell crude oil at 47.40. You can see it's come down quite a bit. The thing to look at, in my opinion, here is the fact that it did go below the 4,800 level, and that was not a good sign. So there's the support at around 4,800. And we trade up to almost 52, so you get 48 to 52. Take that away, and you could be looking at somewhere around the 44 level as a potential target zone. Again, if we put our Fibonacci's tool in there, it may give us a better indication of where this market can go. So let's just move from the highs. So we take the Fibonacci tool from the highs right here, stretch it down to the lows, and you can see that 44.55 is a 50% correction, and 42.93 is a 61.8. So I think we could be looking at the 44 level as a target level on this pullback. But let's see how things play out. So we've had gold going higher, crude oil going lower, stocks kind of a little bit mixed. It's going to be an interesting year. So thanks for watching, and be sure to leave a comment if you like this video. If you'd like to see more like this, please let us know. I'm Adam Hewison for Market Club. Thanks for stopping by.